Welcome back to another episode of the Blockburner Podcast. I'm your host, William, always here with your co-host, Iman.
What's going on, dude?
On the sticks, we got TJ.
Hello.
And then finally joining us today, we got Jason Fang from Sora Ventures. Thank you so much for being here. I know it's super early.
Yeah.
This is great, man.
No, thanks for having me.
Yeah, dude. So you're starting to invest in the space, and I guess one of the first questions that I have for you is like, what brought you to Ordinals, and what's the attraction to Ordinals from your perspective as an investor?
Yeah, so we've been in space, I've been in space since 2015, right? I started my career at Fimbushi Capital, which is one of the early funds in Asia that invested in blockchain. Volatile was actually one of the GPs at that fund at that time. And what's interesting is, so when I started Sora Ventures, we always looked into things that was relatively early, like not just early companies, but early narratives. One of the things I looked at was NFTs. So this was like in, again, 2017, 2018, like early 2018. And if you kind of like remember the early days, it's like, it was ICO and then something called STO, right? Security token offering.
Yeah.
But in between STO and ICO, there was this thing called 721, which ultimately became, NFTs. The thing that really worked out well for Sora Ventures Fund 1 was we have a couple of funds now, but, our Fund 1 was we invest in around this narrative, which is like investing in things that generally early, and the fact that like people weren't really looking at it. And at that time, we call it entertainment, which really in today's world is GameFi, Metaverse, NFTs, SocialFi, and all that stuff around, NFTs. And that worked out really well for us. So last year we moved to Taipei, and then we started our Fund 2, and we decided to go for a similar strategy, which is investing in something that no one is investing.
Yeah.
And this was again February or early February in last year, and we did a bunch of research months before, and we figured out there was two things that was really interesting. One is kind of the narrative around the future of Bitcoin. And that was Ordinals. And the second part was around the future of the future of Ethereum, which is decentralized science. So that's how it kind of came about, was that we decided to allocate 25% of our AUM into DeCi, 25% into Bitcoin Ordinals, and the remaining is more like NFTs plus cryptography. So like more like encryptions and stuff like that.
Yeah, so you were, I guess, looking into Ordinals in February when we started looking into Ordinals. Yeah, and so we've been focusing on like the whole ecosystem and just like trying to figure out like the signals versus the noise, which I'm sure that's, the dominant form of how you spend your time.
Yeah.
Because there's definitely a lot of noise out there.
Yeah.
Yeah, we were really lucky, right? So I mean, at that time, there wasn't a lot of information regarding like what the use cases of Ordinals were, and I actually want to give full like the 100%, like my knowledge in the earliest days of just getting to know what Ordinals is, all to like OnChain Monkey. So the story behind this and how we went from like this relatively like Ethereum fund into more into Bitcoin is we did an investment into OnChain Monkey, which is what I'm wearing right now. Yep. About 3 years ago, 2.5 years ago, and this was like way before Ordinals was even a thing. But I've known Danny for a long time. So when I was at Fimbushi Capital, I led Danny's round, Blockseer at the time. That company ended up being bought up by a different company, and so that was an exit for a fund. And then, so I've always had a really, really like strong trust in Danny's work. And so when Danny came out and was like, "Hey, we're launching, OnChain Monkey," I was like, these NFTs are interesting, but we want to be part of kind of like the shareholder. And so we invested in Metagood, and this was the Metagood round before they even looked into Ordinals. And then early last year, they told me that, hey, we're exploring this one thing called like Ordinals, and this is like, we're looking into moving into Bitcoin. And I read about it. I'm like, this is interesting. Like this feels kind of like the I had like the moment where it's like, wow, this feels like the early days ICO. This like feels like the early days Ethereum, right? So it's like these are things that, like, again, being an investor in this industry, there's the skills which you can bring in from, you know, from a lot of numbers and experience the VC, and then there is the experience that you've been in the space for, you know, X amount of years. And that was a moment where I felt very, very strong about, you know, the future of Bitcoin utility. A big part of it was the fact that, you know, in the early days, you can, like, you know, when OnChain Monkey was looking into Bitcoin, the value there was, you know, you could, you could obviously choose Ethereum, but then, you know, a lot of the stuff that was on Ethereum was, you know, leveraging IPFS, or you could, you know, use Bitcoin, which is everything is fully on chain. So just that was really interesting for us, and so we looked into it, and obviously that eventually, you know, there was a BRC20 that came out, a fungible token that came out, and then the rest was basically history when Binance listed Ordi.
Yeah, Danny Yang is huge. He's contributed heavily into the Ordinals ecosystem with recursion and with parent-child. And so we had him on the podcast recently as well. And he's really thinking about this, like very forward thinking. And then, you know, taking on-chain monkeys from Ethereum to Bitcoin was like a huge step. And I think that is going to be like a large meta of a bunch of Ethereum projects kind of porting over to Bitcoin. I think that's going to be like a dominant form of like activity happening. Did you know that we're more than just a YouTube channel? We also built Mscribe, the first inscription platform built from the ground up for the metaverse on Bitcoin. Connect your bitmap ordinals and use our tools to bring your community into the virtual realm. Support us by joining the movement at mscribe.io. Like, comment, and subscribe for the latest alpha. Back to the video.
Yeah. I talk about you a lot with Will and stuff, because, you know, we've been around for a while ourselves, and, you know, we were very deeply ingrained, I guess, in like the early NFT days, and we kind of witnessed you kind of remind us a lot of Yatsu.
Yeah, that's
right.
True.
We created this comparison. It's like, because we were like, who's this Yatsu guy?
Yeah,
like investing in like a lot of the really important like early things for the metaverse, specifically like during the time when everybody was like completely fading the metaverse, right? Investing in things like Sandbox.
That's right.
And a lot of the early NFT GameFi ecosystem projects and stuff. And it was like, this guy gets it, but it seems like nobody else really does. That's so either he's going to completely flop, or he's going to just completely dominate the future of like NFTs.
Yeah.
So it ended up happening. Like, he dominated.
Yeah.
So we're like,
I mean, our fund is now like basically 7%. I mean, I mentioned that before, it was 25% Bitcoin. Now it's like 7% Bitcoin for our fund too. So this is definitely going to be like more like either it's going to work really well for our investors, or it's not going to work very well for our investors. So it's exciting to see how it's like in a couple of years from now.
100%.
It's really hard to imagine it not working though. Like I feel like I'm crazy or what? What do you think?
I honestly, obviously, I'm biased, right? So just looking at data, obviously, this does seem like it's making a lot of sense. Like obviously, I think a lot of people would say as a fund manager, it's also good to just make sure that there is, you know, yes, you have picked up the momentum and you have picked up the area that I think has a lot of potential, but it would still, people would say, hey, it's still probably better to put like, you know, a quarter of your money in one category. But the way I've looked in Web3 is that, you know, the right strategy is, if you look at one thing that has the potential of becoming the next kind of like big bull market, it's near all in, right? And that's the thing in Web3. It's like, if you did that for NFTs, you've done really well. If you did that for DeFi in the last previous bull, you've done really well. ICO, you've done really, really well. So just ignoring the signal is definitely not something we want to do. I think the most important thing is because the data does speak for itself, right? Whether it is again, it's insane. Like Bitcoin is very similar to ICO in the sense that like things are changing on a weekly basis. This is also something that I think is quite unique in the Bitcoin space. Just last year, I think our investment strategy would be more like, hey, we were incredibly concerned that there's not enough like people investing in Bitcoin. Let's invest in Bitcoin Startup Lab and UTXO management. right, which is Bitcoin Magazine Ventures. And then just a couple of months ago, it was like, wait, there's enough people investing in Ordinals and Bitcoin. Let's try to get enough good developers, like just make sure there's just good enough about developers coming in so that there's like really good products. And, obviously now it's like more like there's plenty of developers. There's maybe a bit too many sketchy developers putting on unnecessary things. Let's really back the ones that are making sense.
Yeah. Yeah. And that's largely what we try to do here is like since we're builders in the space, we know like how all this stuff works and we're seeing problems as we're building and we try to look for solutions. And one of the early solutions was Tap. And so we knew that Tap was playing a critical role in like the execution of all the ordinals. And so, I mean, to us, it seemed like Tap was like a no-brainer as like a platform for us to build on. And I mean, it's so far is going great, right? And so I guess you saw similar things with Tap. You invested in them. Like, tell us like I guess your thought process in like finding these projects and like and specifically Tap and what they're doing for the space.
Yeah. So I think Tap is really interesting because, a lot of people were bullish on, BRC 20 June, December area. I mean, I know about this because like, we did a conference in Taipei called the Sora Summit just end of last year. And during that time, people were just trading. I mean, everyone in the office was trading, BRC 20 tokens. And so the thing was BRC 20. But then quickly, a lot of people also realized in the process of trading these guys is that there's a lot of limitations to what BRC 20s can do, right? So one of them being that, yes, it's amazing for fair market launch and it's amazing for meme coins, but if you want to do like VC back coins, it's incredibly difficult at that time. And so when we looked for a lot of options, there wasn't really a lot, right? There's only just Tap that made sense, right? So that was really this kind of the start how we got involved with like why we found Tap being interesting because it just seemed like a very obvious solution for developers looking to launch like tokens, especially the VC backed tokens. The second part that was really interesting is this concept around the decentralized indexer. Now I know right now I think the indexer to my knowledge is still centralized, it's still run by Benny. The concept around the centralized indexer became much more powerful after the kind of the Julie upgrade between kind of like, Domo and Unisat. Again, Unisat is actually our portfolio company. So there's nothing wrong with kind of like what happened. I think it's more in the process of our industry figuring out because, when Domo started this, it was mostly an experiment and it made a lot of sense for him to just like, just say, hey, I started this, but then, I don't really want to make this upgrade, right? But then obviously it became like obvious, an industry that has billions of USD in terms of assets. And so this became obviously a problem, right, during the upgrade. But what's interesting about this is we realized it's like, okay, well, a lot of people had, hundreds of thousands of USD in their wallet or showing up their wallet. But there was at one moment and during the kind of like the debate over the Jubilee upgrade, it's that there's going to be a split, right? And so that was interesting, at least for me, because that made me realize it's like, hey, wait, you have all this money in your wallet, but there's no consensus, or potentially there's no consensus around like how much it's actually worth. And so that became a problem, right? That became a problem in the sense that if there is scalability moving forward, perhaps this is not the right standard to be working with. Again, I think BRC 20 is incredibly, I'm actually very, very bullish on BRC 20. Without kind of like sharing too much alpha, but there are stuff happening down the road in the next couple of months that would improve the entire standard. And we are investors in a lot of portfolio companies who are building around BRC 20 or even launching tokens around BRC 20. Mm-hmm. But I think the whole point here is there's a process. And again, the space is early. And because a unique part of the space is really most of them are one developers who start this one thing and took off, and then there's other people who follow in to try to like monetize on it, right? I mean, Benny also included, right? I mean, you look at Benny as him himself, a couple of developers, and then there are a lot of these FAs who are involved, right? So I think the point here is, because Ordinals is unique in the sense that it wasn't like this one team getting ready to launch this one product and was VC backed. A lot of them was done organically through developers. Like a lot of these are basically developers who had a very strong vision about like what is valuable in the space. One of them being the need for a decentralized indexer. And at that time, after the Jubilee upgrade, it became very obvious that we didn't need something like that, right? And Tap was the solution for that. And regardless of whether it was run by Benny or by the people that worked with Benny, the point here is I think it's a valid investment because it's worth my time for sure, because I think that will get more developers to, I mean, especially the Western developers. You know, I speak a lot about like Western and Asia-centric, communities and developers, because I do think that is a huge kind of market. It's a very big market in the sense that there are two crowds kind of like split up. There's like the mostly Westerners, and there's a lot of the Asia-based community, and they think differently about inscriptions, and they think quite differently about products built on Bitcoin too. I'm happy to kind of share my opinion on that as well. But the whole point is that, especially for Western developers, I think they'll care a lot more about building on decentralized indexers. Which is what we're seeing right now, which is like people who fundamentally, build on Tap, are people who understands kind of like the importance of having a decentralized indexer. Yes, it's not like fully decentralized right now, but that's where Benny's heading, right? That's where the team, Tap, and all those guys who are building on Tap today, that's where they're heading. And so, people are very excited about this concept, right? And people are very excited that it's coming live very, very soon. And once that goes live, I think that's going to get more developers to recognize how valuable Tap is.
Right.
And so, from our perspective, it's really about investing in things that make sense, like solving a real problem in the early days.
Yeah.
And yes, a lot of people do look at money and like DeFi and like staking and all that stuff. But for us, it's more about making sure that there's enough really good developers coming into this space.
Yeah, I totally agree. I think any project that's focused on developer tools are going to be the single most important like assets to invest in. Did you know that we're more than just a YouTube channel? We also built MetaZone, the first app store for the metaverse. Buy, sell, and explore a new class of digital assets like our flagship game Rovi.ai. Support us by collecting your digital assets through MetaZone at metazone.io. Like, comment, and subscribe to stay updated. All right, back to the video. Can you tell us a little bit about like the differences in like the frame of mind for like a Western individual versus someone in Asia?
Yeah. No, so I did a presentation at Coinlist. Again, I just came back from the US, and Coinlist is, the guys at Coinlist are incredibly smart. Like they were at ETH Denver. They picked up something that's like really, really different about ETH Denver this year.
Yeah.
Basically, there's a lot of, there's a lot of Bitcoiners there. There's a lot of people from Ordinals that were there, right? And the Ord Denver thing is real, right? There's, before I got into Denver, I was like, hey, this might be a thing. But when I got there, it was huge. It was like good amount of events that you didn't have to really. I mean, I barely went to the Ethereum events myself because there was just so much stuff happening on the Bitcoin side. But no, they picked up something, and then we caught up, and we realized that this was something that they were interested as well. And so we even had this meetup when I was in SF where we did a presentation on them, and a big part about the presentation is kind of the understanding between kind of the West and East and the thought process about that. So what's interesting about this space, it's like, inscriptions are one thing, but then if you ask this one question, which is, what is your favorite inscription? To the West, a lot of them will tell you that, I'm big fans of OnChain Monkey. I'm big fan of OMB, Note Monks, Bitcoin puppets, but Bitcoin frogs. And mostly digital, mostly digital art, right?
Yeah.
Which that is a valid answer, right? Now, if you ask the same question to a different audience, and that the audience is coming from the East, they'll probably give you something like, I'm a fan of Track. I'm a fan of Turk, or like I'm a fan of Legal, like a bunch of these BRC20 tokens, or potentially some of these track-based tokens. And the idea here is our Chinese audience are much more into kind of like the fungible token side of the descriptions rather than the non-fungible. And I'll give you the kind of like the percentage. I think if you look at any digital art that's like even hot, like 99% of them, I think I can probably say 100% of the ones that are hot right now are none of them are run by Chinese. In a sense that like it's started by the West. There's some Chinese community exposure in there, but fundamentally they're Western, 100% like Western. But if you talk about like Bitcoin layer 2, majority are run by Chinese, right? So like if you look at a lot of the BRC20 tokens, majority are Chinese, right? So it's like it's very interesting because it's like it's one of those things that I think people just they find it interesting because the Westerners, it's these inscriptions, the digital art, right? It's all about the messaging, it's all about the art, it's about the community. It's not necessarily about making money is important, but it's not necessarily about making money. It's more about the kind of the value, the principle that comes out from that community, right? For a lot of Chinese, like that's cool, but it's not the most important thing, right? And so I emphasize on specifically Chinese because really like the Koreans are not really doing much in inscriptions. The Japanese are not really doing much in inscriptions. It's really mostly the Chinese who are trading inscriptions right now, and exchanges that are supporting it too. And a lot of them are Chinese miners themselves who got involved with Ordi and Sats and Rats in the early days. And so this is interesting for them because there is the gambling aspect of it, right? There's the opportunity for them to make kind of, in their opinion, the next 10x or 100x. A lot of them have made money from Ordi, and so now that they think like Ordi worked, let's look for the next Ordi, right? Some of them will feel that it's from layer 2. Some of them it will feel like it's potentially from Runes, right? Runes is picking up in Asia as well. So the whole point here is that the East is more about like the fungible aspect of Bitcoin, whereas a lot of the times the West is mostly about the non-fungible aspect of Bitcoin.
So do you have like a prediction of like why that is? I would have figured that the East would have enjoyed like the art equally as much. So why do you think there's that distinction?
Yeah, it's really the gambling aspect, right? It's the money aspect. So it's like if you look at most of the art, I think it's hard for people to understand because there's a lot of digital art. It's just really hard for most people to understand because one is they're mostly started by Westerners, and so naturally there's a language barrier. The content around kind of these digital art is a messaging that is in the form of the English language, and so for a lot of people it's hard to understand. What's interesting about like I can bring this up because this is part of it, but like TTP, right? Like there's track, tap, and pipe. Right. The reason why I say Runes is picking up because out of TTP, within the TTP, track is kind of like relatively balanced. It's balanced between kind of the mostly Westerners, but there is a good amount of Asia community, a community from Asia that's involved. Tap is not out yet, but it's mostly VC backed. But Pipe, surprisingly, Pipe has a really big community in China, among the kind of the Chinese. And so it's interesting for them because they understand the UTXO based model, and they're also kind of like understands like what Casey's trying to do. So Pipe actually, I mean, Casey's Runes will actually do really, really well among the Chinese audience because of Pipe. There is like in these like WeChat, there's all these like obviously there's in the West it's more about Telegram, it's more about like Twitter. In the East is mostly about WeChat. In the Chinese is more about WeChat. There's like 30 plus WeChat groups around Pipe, and like one WeChat group you can hold up to like 500 people. I've seen some of these screenshots before. It's insane. And so like people are like waiting for Runes because of Pipe. But one of the reasons why they're so excited about a Pipe is the fact that it's UTXO based, and the fact that this is something that, in their opinion, that they understand. And the most important part is there's a tradable aspect to it. So you look at a lot of the BRC20. They're also involved with a lot of BRC20, but the part that that's not really popular among this TDP is the art part, right? There are collections on Pipe. There's art collections on that are like, I think there's about 30 plus collections, right? Not a lot, but there's still some collections on Pipe.
Yeah.
But it's really the not like the fungible aspect of that that's like really popular, and that is mostly because the audience who are using Pipe, who are following Pipe, are mostly Chinese.
Yeah, that makes sense.
Yeah, I think a lot of it has to do with also probably the communication of like in the culture behind like art and stuff. It's very much like frat bro energy, which I think is very more conducive to like Western culture, right? Like look at OMB's like marketing as of right now. It's a very much like a rebellious movement. Things that are like, you know, I don't know, kind of like ingrained in Western culture and stuff like that, like rebelling against the man, dude, stuff like that.
Yeah, pizza ninjas. I mean, that's a call out to the Ninja Turtles, right?
Stuff like this.
So I don't know if Ninja Turtles was a thing in Asia.
Trevor's amazing.
Yeah.
He's amazing. Yeah.
Yeah. But I think that's part of the issue, because the reason why fungible tokens, and we had this problem ourselves, like we kind of mostly missed a lot of the art NFT movement from 2020 and 2021. We were focused more on like metaverse infrastructure plays and stuff like that, contributing in that arena, because it's really hard to derive like an investment thesis around like a picture and like what that represents, what that's going to kind of like generate and manifest into. But it's a lot easier to derive an investment thesis around like a fungible token ecosystem play or something.
That's supposed to support some sort of ecosystem. Yeah,
exactly. You don't have to like communicate culture and like all these things, and again there's a language barrier there too, so it's like language plus a cultural differences, like you guys don't make any sense. So right,
why are you buying pizza ninjas?
Right. So I think that makes a lot of sense. So yeah, if I didn't really understand the culture and the language as much, we universally we understand things like value and you know, utility, mathematics and stuff like that, right?
Application.
And you could represent these things much more efficiently through like graphical representations and such like that. Like to actually like paint a picture of like, here's where the value comes from. It's an ecosystem.
Yeah, right? and we've seen the screenshots too for NAT, right? For WeChat, right? There's a bunch of like WeChats for
There's a lot.
Yeah, NAT.
There's a lot. Yeah. They're picking up really, really fast.
So there's like it's interesting seeing how like there's a divide of like, you know, action based on like the cultural differences and the language barrier as well. But yeah, I mean, ultimately it's like the good thing is it's all in the same space, right? It's all essentially ordinals, right? There's some like bifurcation on like different aspects of Bitcoin that you can kind of deploy like technology to.
Yeah, 100%.
So that brings up to the next question is like, we have ordinals, but we also have other stuff, right? So how do you consider the other stuff on Bitcoin in comparison to ordinals? Is it equally as investable, or are you like thinking more like, well, the mind share is like roughly on ordinals, so I'm just gonna stick with that? It's like, how do you think about that?
Yeah, no, that's a great question. So I think the whole idea around ordinals is that, you know, obviously, you know, we're running our announcement for our second conference right now, Sora Summit, and it will be the biggest /quote conference. It's interesting because we like last year we called it Bitcoin utility, but then a lot of people will argue that like if you say it's Bitcoin, then it's like you effectively talk about like there gotta be stuff around Lightning, right? Because that also includes a lot of maxi stuff as well, right? So it's like it's but then if you just talk about ordinals, right, then it's like you're missing a big part of other stuff that's happening in the space. So I still don't know what's the proper term. That it's like you know, basically excluding the maxis and excluding Lightning. It's like, what is that term, right? But including ordinals and all the other stuff that's happening around ordinals, like what is that term, right? So we're still figuring it out. But you're right. There's a lot of stuff happening beyond ordinals, right? I think the whole point is that, you know, like the Ordinals protocol in general have sparked a wave of liquidity around, you know, around this Bitcoin narrative, and obviously, you know, some people will strictly just want to build on Bitcoin, but there's also a good amount of people, which we've seen in the last couple of months, who are interested in these side chains, right? I call them side chains because, you know, they could be on Bitcoin. They don't really like, they're not like fully dependent on Bitcoin. And these are specifically on the topic of Bitcoin layer 2s. So there's a lot of money pouring in that. And what's interesting about that is there's a couple of ways I look at this. One is that, Bitcoin, the kind of Bitcoin that there are two narrative is very easy to understand if you try to explain to people. Whereas Ordinals is kind of hard. I mean, there is, even until now, there isn't a lot of like proper translation, even for like, or like English to Chinese about like what Ordinals is, right? So Bitcoin L2, easy, right? And it's just basically, hey, we want a faster Bitcoin and we want a cheaper Bitcoin. And it's easy for a lot of people to understand because everyone who have some form of interaction of Bitcoin, they'll realize that, hey, it's slow and it's the fees are high, right? So it's easier to understand, so it's easier to market, and it's easy to kind of like do a bunch of PR around that. The second part is it makes a lot of sense for a lot of Ethereum people to be kind of like building around this narrative because there are existing things to benchmark with. For example, stacks, right? So it's like stacks, I think is like what 4 billion or 3 billion market cap. A lot of these developers who came out who want to kind of benchmark on kind of like the next stack, they're valuing their company around 100 mil, 200 mil. Now, from an investment perspective, that is very expensive, right? But from kind of like benchmarking that to stacks, like they'll feel like this is relatively cheap. There's like a 30x return kind of like, potentially out there, right? So one of the things I think it's happening right now is a lot of VCs are betting that there's going to be a lot of these Bitcoin L2s, even though a lot of them may perhaps know that it's really just sidechains, right? I mean, even stacks they're really sidechain, right? We're still waiting for their Nakamoto upgrade, but it's been around for what? These announcements have been around for like months, right? So we've been waiting for that. But the whole point here is a lot of these are basically forks of Optimism, forks of ZK. And then putting together. And a lot of them are outsourced as well, right? They have like Particle Network to help them build it, and now a lot of them are going to Babylon for security, for staking, and it's kind of like it's this forks and outsourcing and getting other people to build with you and then put into one product. And then just changing the narrative. That's why we're able to see like 50 plus Bitcoin L2 in the span of 2 months. I mean, Bitcoin's been around for 10 plus years. So why is it now, right? So it's because people have realized that this is a very easy sell. And
100%.
Part of it is part of it is stacks. It really started with stacks, and then obviously people like again like specifically I think the Chinese love. I think the easy way to look at this is that. If you read the book called 0 to 1 by Peter Thiel, he talks about like this chart where it's like the Americans really like they built a lot of like innovation and it's a lot of these like new tech stack, but then you look at the Chinese and it's like they don't do a lot of innovation, they don't do a lot of invention, but they just copy and paste, but didn't really know how to sell to a market because the market is like much larger in Asia, which is true, right? I mean, a lot of stuff that's happening on Bitcoin Layer 2 today is basically just forks of other things. So the tech stack itself is like if you actually try to like dig deep into it, you'll realize like a lot of them are not just like forks of one thing, and it's not entirely too interesting. But the narrative and the BD side of it is incredibly like interesting in the sense that they've captured a lot of people, including the VCs. They've captured a lot of a good amount of communities to stake. And what's really interesting about this staking mechanism is, whereas in the West, we like to think a lot of things are organic, in Asia, a lot of these stakings are actually not organic. What I mean by that is they have all these like under the table deals. Like for example, they'll go out and borrow a bunch of Bitcoin for X amount of USDT. And there's also all these like insider like deals and agreement. I think a lot of people don't understand that that's a very common thing in Asia.
Yeah,
and so whereas a lot of people will think that hey, this is organic, it's popping. It's like it's not popping. It's just like these guys are really really good at BD and they're really good at negotiating really good terms. They see this as maybe 100x return, so they're willing to give out like it's like going to the bank where you're going to the bank and be like, hey, I'm willing to borrow like 100 mil from you and I'll give you 30% interest, right? And the bank will be like, duh, of course I'm down to do that, right? And then the minute they have this money to stake in, there's a bunch of people who look at it and say, oh shit, this is popping, right? And then they get other people to join, and then like once they launch a token, there's just so much hype that they make a bunch of money and pay back the bank 30%. But then realistically, they may probably, I mean, the treasurer will most likely make a lot of money. I kind of like mentioned this on my CoinList presentation as well, which is like, my prediction of who's the winners, who's the losers in these Bitcoin L2s. But yes, you're absolutely right. And other than Ordinals, there's a lot of stuff happening out there in Bitcoin.
Yeah, we suspected that this sort of gamification was happening on some of these L2s, but we could never really like pinpoint like a target is like, you know, there's like a smoking gun here. But would you say that a lot of this like gamification is happening in a lot of parts of, I guess, cryptocurrency? Like, do you see this often?
Yes.
Okay.
There's a reason why GameFi is so popular in Asia, right? I mean, people are just more, they like the gambling aspect of Bitcoin. I mean, I had the chance to catch up with Casey. I think you follow my tweet, then you know exactly what I mean. I mean, Casey's not shy about kind of sharing that entire ecosystem around, Web3. It's basically a casino, right? And so he understands like what people want. And so Runes is exciting, and I'm very bullish on Runes because they're likely going to add certain elements and certain functionalities that kind of like amplify the casino effect. And that's quite powerful. A lot of people, a lot of developers specifically, I think when they develop, they're always thinking from a developer perspective. Mm-hmm. But Casey is very dangerous because he's thinking from a gambler's perspective.
Yeah.
And you think of a gambler perspective then, and you're a developer, that's like one of probably the biggest, next 100x, 1000x where the alpha is, right? So again, I think this is my opinion, right? Because maybe I know slightly a bit more than other people in this space, but what I do feel about the team, the Ordinals team, is that they really do understand what people think and what degens really want, and because the way that the way that they've done the research, the way that they kind of like seeing what works, what doesn't work, they're most likely going to build the most powerful like Bitcoin standard yet in the coming month.
Mm-hmm. What do you think about this this manipulation though, like strategy for like a lot of these projects, like buying like Twitter followers or getting out these loans to like stake and all this stuff? Like, is this like a legitimate strategy, or do you see this as like some sort of like gimmick strategy, just designed to like pump or just designed to like extract like an airdrop? So
yeah,
is this like a legitimate strategy, or should we stay away from that, like in the like a general like investor point of view?
Yeah, so that's a great question. Again, this is my opinion, and I feel very strongly about this because I've been in the space. My entire career around Web3 has been in Asia. Even though my education and all my background has been the West, I've never actually studied in China before, but I've worked most of my life in Asia. And what I've learned about this is that, generally in Web3, when there's something that's sketchy that's happening, it usually means that this space is going to stay for a long time. The Ordinals Bitcoin narrative is going to stay for a long time. The last time we've seen something relatively sketchy like this is definitely in the early days of ICO.
Yeah,
I'm sure there's a bunch in the early days of DeFi as well, right? But the whole point here is, early day ICO, early days DeFi, people did a bunch of sketchy shit, and that narrative stayed. That narrative became, kind of next 100x for a lot of the funds, right? When we're starting to see that right now. Okay. And is it legit? I would say is in my opinion, I would not recommend my portfolio companies doing that. Okay. Because it's not like by doing that, then you're effectively very short-sighted, right? I mean, as most just so you know, most of these deals that are out there in Bitcoin Layer 2, a lot of the investors have these 1-year cliff, which means that you're not going to be able to get your tokens until a year from now after listing, right? And so these strategies of like borrowing money and all these deals around it, it's not meant to last for over a year, right? It's only meant to last for maybe a temporary, like X amount of months, and then that money needs to go back to the lender, right? Eventually. So it's like a lot of these stuff you see are mostly optics, And so obviously I wouldn't think this is the right move in terms of finding the right product fit. But people are doing that right now. It's very popular. Like you can use these third parties, borrow a bunch of like money to stake. And a lot of them are coming from miners, right? I mean, miners have a bunch of Bitcoin. They lend them out for X amount of interest, and then they claim that they're here to support you. And then, I mean, that's how they make money.
Yeah.
Right. So a lot of these deals is happening, which is great. But it also means that there's like, we had to spend more time on building layer one, because fundamentally the whole point of, kind of like building on Bitcoin layer one is that we're basically building this ecosystem where, the miners will never have to kind of worry about the halving, like the fees are going up, like these organic things are happening, and it's going to be the next big ecosystem around Bitcoin, and these things should be large enough that it will sustain on its own, and it will only grow, and these fees that's generated on chain on Bitcoin would basically justify for the security of Bitcoin in the future, which FYI, if you have a bunch of shitcoin, you should probably care about this, because the security of Bitcoin means is also security of Web3. If Bitcoin dropped 30%, then your shitcoin is going down like 80%.
Yeah.
So, fundamentally, that's what we're doing. Like, Sora Ventures is basically investing in Bitcoin layer one, because we feel that, as there's going to be more happening down the road, then there needs to be a way for miners to be secure on their business, right? And so, you asked me if a lot of these Bitcoin layer 2s are going to be there in 4 years. I doubt it. Yeah. But I do think a lot of these layer 1s will be around for sure.
Yeah. So like from your perspective, like you see like the crypto community, right? People are buying all kinds of stuff. Do you believe that the community, like the people actively participating in ordinals, do you believe that they're aware of these tactics? Is this something that you think they're not aware, right?
For sure not.
Okay, I didn't think, because
for sure not.
We look at
for sure not
as much as possible, and many times, like I would say, there's a 70 to 80% of the time we see a bunch of this manipulative tactics happening, and people are just buying it up, like it's fine, and so give me your perspective on that.
Yeah, so our space is really about especially in the early days, right? Again, these are signal that I think what means that this space is going to stay, specifically Ordinals and Bitcoin utility. But this is really about kind of fake it until you make it, right? In the sense that a lot of these deals are, they've realized it's like the low hanging fruit, something they can capture. And what's really interesting about these things is it's actually not hard to plan out. It's like if you get like a bunch of whales together, you get in one meeting and be like, hey guys, let's just build this like Bitcoin layer 2. And the way that we reflect how popular we are is through the staking mechanism in the early days. Let's just get everyone's Bitcoin together, right? Let's get everyone's RAT together, right? And these are things that, if they already have, they can do it, right? As long as you have a couple of whales who are willing to kind of support you. The same thing that probably Sora Ventures can do if, we met with a couple of VCs and be like, hey, let's incubate a project together, and then we'll all pour some money ourselves, right? Everyone put in 50 mil, let's do it, right? Then we can probably build the next kind of like large L2 out there, right? That can compete with all the L2s out in the market. But is this necessary, right? Is this something what we really want to do, right? I think the whole point is, sidechains are interesting, but at the same time, sidechains is actually quite important in the sense that it's gotten a lot of people involved with Ordinals, right? So everything's a win for us. But I think from our perspective, it's like we've been in this space for long enough. We've been in this space not long enough. We've just gone early since last year. But I think for our perspective, it's because there's not a lot of VCs who are investing in layer ones. We feel that the learning curve is very high too. Just so I'll give you an example. So I had a chance to meet up with some of the managing partners in the Valley, and a lot of them are managing, hundreds of million USD, some of them in billions in their AUM, and they know about Bitcoin L2 and they're investing in Bitcoin L2. But the minute I pull out my coin, my CoinList presentation and talks about like L1 stuff, like they're kind of lost, right? They don't even know what's happening, right? I asked them about, hey, do you guys know what's DMT theory? Do you know what's NatCats? They don't have no idea what's happening, right? So it's like These are signs, in my opinion, that I think, VCs are not necessarily making decisions based on kind of like their overall understanding of Bitcoin.
Right.
Yes.
Which that was my initial assumption. It's like, if you're investing in something, you better know what's happening like holistically, right? You're doing your research on L1s, L2s, you're doing your research on Ordinals, like sats, everything, right? And then you make that decision that, hey, we've decided to book in Bitcoin L2. But really interesting thing is, because for them, these funds are like, we're placing a small bet around this. It's like, this is like a 3% allocation of the entire fund. So it's like, we think this narrative whole because there's a benchmark of stacks out there. We can benchmark against stacks, right? Like there's something that we can look at. There is a case studies we can look at. And so that's why we invested. Which to me is quite shocking, because I thought funds were like mostly about innovation, investment. And that's really interesting, because that made me realize something, which is everyone in our space, every investment firm in this space is called venture fund. They're called VC fund. But realistically, a lot of these VC funds are no longer VC funds, in the sense that, they're not early stage investors, right? So a lot of these early stage, I don't know how you would call that but probably a late stage VC fund. But when the later stages you go, you care less about kind of like the fundamentals. You care more about like the numbers, right? The things like the math, like the numbers. Like you look at PE funds, right? That's what they care a lot more, right? Whereas like in early stage, because like there's not a lot of things to benchmark against, there's not a lot of case studies, there's not a lot of numbers, there's not a lot of data, that is really kind of investing based on your experience, right, in the space. So we're that type of category, where we're investing based on experience. We're investing based on how our understanding in the industry, and our understanding of what is where we can smell alpha, right? So that is interesting, because a lot of VC funds who are looking into Bitcoin L2s are all looking at, maybe more like case studies, right? Again, benchmarking to stacks. There's not a lot of VC funds like us who are looking for the next 1,000x alpha, because that's always going to be a lot harder. I mean, there's no case study around Bitcoin Ordinals, right? I mean, it's been only around for less than a year, right? A year at most. There's not a lot of case studies, and so for a lot of people who you're asking, hey, why don't you invest in Ordinals? And they're like, yeah, we're looking at Bitcoin L2s. Like that to me is just alpha, like pure alpha. They're basically investing in L2s, and then eventually going to slowly kind of learn about L1s, and it's going to be a top-down strategy. But before they do that, we're just going to start investing all across L1s and all across all the toolings and everything. I mean, we have like 28 portfolio companies in Bitcoin now, and there's zero investment in L2s, and that's how I think certain and that's how I think important it is to be a VC that holds your own character and your value and what you believe in. And not be distracted by a lot of things in this industry. It's also important to understand, like, every funds out there is not going to be the same as your fund. Someone will be later stage VC, someone will be early stage VC. We're super early stage VC, right? Our fund is only less than 50 mil. So it's like, these are things that, like, fundamentally it makes sense for us, because we are looking for things are lower in terms of valuation. We are sensitive to valuation. We only look at things like lower than 50 mil. So like that is our role. And so for that reason, we are investing in things that people are not investing. But that also means we're going to learn a lot more, right? We're going to, our risk is slightly higher. I wouldn't say our risk is higher than L2s right now. Yeah. The fact there's like 50 L2s coming out in the span of 2 months is, in my opinion, like none of these L2s will like 95% of these L2s will not be supported by exchanges. Like 95% of these L2s will not be supported by wallets.
Yeah.
Like launching your own L2 is like launching there's no different than launching L2 versus like your own like protocol, right? Your own chain. You basically rebuild all the infrastructure and get all the exchanges to support you.
That's right.
Exchanges right now, they have a lot of things they want to support in Bitcoin, like one of them being runes, right? And so like where you have 50 plus companies popping out, and they all like want to become the next stacks or the next whatever, right? It's gonna be pretty hectic. I think exchanges will be overwhelmed, wallets will be overwhelmed, but most importantly, I think the whole point here is like a good chunk of like of those L2s will eventually realize like shit. It's like we need more money, or like we need more ammo, or like we need something else in order to get integrated. Otherwise, we're not going to make it, right? Versus on L1, there's only a handful of really good L1s.
Yeah.
So it's like I'll probably argue like there's like less than like 4 very meaningful L1s, and so like for me that's alpha, right? There's only 4 meaningful L1s, and we're all in it. Then it's like all of them will eventually get supported by exchanges, because like there's only 4 L1s, and exchanges will also want exposure in Bitcoin L1s, right? And so they look at it as, well, there's only 4 that's meaningful. Let's integrate all 4 of them, right? So again, very different strategy. I respect all the strategies out there for different VCs, but the whole point here is we are investing in things that, in our opinion, that can bring developers into this ecosystem, that are sustainable and they're scalable.
Mm-hmm. Hey, Jason, why is it? I find it interesting that you say that a lot of the VCs start with L2. Is it because they are so exposed to the L2 concept from like Ethereum and all that it's an easy thing to understand, that say, hey, my L2 it now works for Bitcoin, and it's like, okay, here's my money. Is it really that simple? Like
I'm curious though.
Yeah. So
from your perspective, just real quick, just on your experience, is like, I understand that there are some there's some case scenarios of L2, like Matic and Polygon.
Yeah.
Like that is a very successful example of like something you wanted to get in early on, right? Like on Ethereum. But how many of these like later to the party L2 entrants on the Ethereum side have actually like amounted to something of substantial, substance, I guess, winnings for like the VC entities out there? Like, has it been so magnificent? Like, from our perspective, like, yeah, every time a new L2 has deployed on Ethereum, we're not witnessing any like real innovation occur.
Yeah, it
always comes from L1, right? So like, what are these investors actually seeing that, like, guess like the participants of the actual ecosystem are not? And that why does that make them so bullish? Like thinking somehow it's going to be different on Bitcoin this time around.
Yeah. Great question. I'll try to break it down in like 3 points, right? I think the most important point here is most VCs do not know what's happening in Bitcoin L1. I think there's a lack of education and understanding in terms of the entire Bitcoin ecosystem. And for them, it's easy to, just like any other retailer, it's easy to understand, hey, why don't we build a faster and cheaper Bitcoin? And so Bitcoin L2 is that narrative, right? So, I mean, not many VCs are going to be like us, where we spend months on Twitter and every day, like hours on Twitter, talking to people about like, what's the alpha, guys? Right? It's like, it's a lot of work, right? I mean, VCs realistically have a lot of things to manage, and especially the Web3 VCs. I mean, they have way too many categories to look at. Like for us, it's, we made it simple, right? We made it simple for our investors. Like, look, if you want Bitcoin exposure, Sora Venture is amazing, right? But if you want like Ethereum and like heavy Ethereum, like Ethereum heavy funds, like that's not us, right? If you want like L2 heavy fund, that's not us, right? So we put the product out there, and people decide. We let the market decide if this is something that's interesting for them. Again, our fund is minuscule compared to a lot of the big funds out there in the West, right? 50 mil is really, really small. And so I think it makes a lot of sense, because if you're looking for something that has potential of 100x alpha, you would put maybe like a couple % of your AUM into Sora Ventures, right? The same thing that in the early days, when people are like, how much money should I put in Bitcoin? A lot of people would say, hey, put 1% of your money into Bitcoin. The 1% referring to like high like volatile assets, right? As an investment. So going back, I think L2s are interesting for a lot of the big VCs, is because there is there's still this knowledge gap. Like a lot of VCs don't understand what's happening in L1s. So for them, like easy L2s are something that is easy to understand, especially coming from the Ethereum world. And the most important part within this point is that they're able to benchmark against stacks. right? So that's something that they can already see. There's something that in the market that they can be like, hey, it's this. If we built a second stack that is like,
I see.
A tenth of the price, that's amazing, right?
I see. Yeah.
The second part is a lot of these VC have, the way that VCs make money is not necessarily they want to have like realized profit. They just want to have paper money returns, right? So let's say, for example, these, you come in at like 50 mil valuation, and then you notice that in 2 weeks, these companies are 100 mil valuation. And then in the span of a month, these companies are at 200 million valuation, right? That is like, in their opinion, even though, in my opinion, that is like, it's not sustainable. But for a lot of VCs, like, this is paper money. Like, paper money is good enough for them, right? That's how they go out to pitch. They're not necessarily their VC fund, their 10-year fund.
I see.
But if you can justify easy, 4x on paper, that's good enough for them. For us, it's different. Like, we're much more liquid in the sense that we want to exit within 5 years, and so we return our money back to our investors within 5 years. It's like, we don't have 10 years, right? We don't have that, and which means that we also have to show performance within a year or 2 years of our investments. And so, like, for us, it's like we can't go for these paper money plays. But for a lot of VCs out there, especially traditional VCs, like traditional Web3 closed-ended fund VCs, they love these paper money gains, right? And that is amazing to their books. And so they don't really care if this is Bitcoin L2 or Bitcoin L3 or whatever. It's like, as long as, I buy it now and then the valuation pumps in 2 weeks, then, this is money, right?
Yeah.
At least to them, right? And so that's why you see, like, that's very interesting, right? Where it's like, they've seen this trend where it's like, oh shit, this valuation has gone up like 2-3x in the span of like 2 months. That's insane. Let's get in, right? And the third part, which is really interesting here, is majority of the Western VCs, a lot of the VCs they're managing hundreds of millions, they're managing billions in terms of AUM. And so if you look at majority of deals in L1s, a lot of these check sizes are like 300K, 400K, right? But on the Bitcoin L2 side, because the valuation is so high, you can put in like 5 million, you can put in like 10 million, right? So from their product perspective, the fund perspective, it makes a lot of sense to be investing in Bitcoin L2s because the valuation are high, kind of narrative supports it. I think my opinion is that it doesn't really support the narrative because these are all sidechains. They're not really Bitcoin L2s.
Correct.
Yeah. But whatever, right? The VCs think that this is L2, right? They think it's Bitcoin L2, and they think that there's going to be a way to convert to Bitcoin L2 in the future. And so that they buy that narrative, right? And so from their perspective, like, that holds for them. And so that's what they're willing to put in that relatively large check size, because they think that this is going to converge into eventually the Bitcoin L2, which I could be wrong, right? I mean, I don't know, but again, I like to look at things that actually make sense. Like, stacks have been around for a long time, and like, they're really still fundamentally driven by their own chain, and their own, like, TVL is mostly their own chain as well. A lot of the DeFi products they build is all mostly their own asset. And so perhaps maybe this wave of L2s coming in would get more people to kind of figure out how to, like, actually build on Bitcoin L2. I don't know, but like, that might be a trend. But as of right now, it's like it's very clear that these are just mostly side chains. So these 3 points, I think, really is the reason why a lot of the people are excited about L2s, or quote unquote sidechain L2s.
So
go ahead.
Yeah, I'm just curious now because you're giving like us like a master class like into the insight of like the VC mindset and like just the system of like what VC, how it operates in Web3 and what it can kind of like enable as far as like, overall industry growth. But the thing that we're seeing, because you're so focused on L1 and so are we, there is an ethos like among the L1 ecosystem that is like very like anti VC establishment, having any way like somehow this is going to be like a very necessary component to like growing the layer of ordinals in its own right. How do you actually see like the nurturing ecosystem of like L1 initiatives? Like you said, there's only a handful that are actually where the attempts and from your perspective, ours as well, like they can actually turn into something like tremendously like a paradigm shifting innovation, right?
Yeah.
Well, how do you advise like people building in that space or that have the desire to contribute to like more types of technology infrastructure components like that, and navigating like the existing ethos of like stay away from VCs, everything needs to be like freely distributed or whatever, and playing along like that.
Great question. So I have the same. A lot of VCs are generally not the right partners to work with. I do agree with that, but there are always that outliers. Like there's always a handful of VCs, who are genuine about their investment, who want the community to succeed. They want that narrative to scale, right? I have this talk with Casey all the time as well, which is the.
Oh no,
dude.
Yeah.
I think you DC'd, right?
Oh, there's still 2 participants.
Yes, I understand that it's important that we work to build a lot of things that Runes are building, and it's also important to help build that growth around Runes. But it's also important to remember that all the L1s are one family. All the L1s, because they're extremely early, there's only a handful of really good ones. It's extremely to take care of all the L1s. And I'll give you an example. A lot of people shit on BRC20, right? Because obviously it has its limitations. Yes.
Yeah.
But BRC20 is by far one of the most important role in the L1s today, because they're the only L1s that have Binance supporting them. OKX, XGX, like all the major exchanges supporting them, right? If exchanges ask themselves like, hey, like we support this one thing called BRC20, but it was a huge failure for us, what makes you think they're going to invest more time and energy into other L1s? Unlikely, right? So this needs to be a success story for them, so that, again, exchanges do not operate like VCs, right? I mean, VCs do a lot of work and research around risks, investing in things that has a lot of potential. Exchanges do not do that. Exchanges look at things that make money, right? Exchanges look at things that, hey, is this integration worthwhile? Am I getting a lot of people to trade on my platform? Are these generating fees, right? Exchanges are way more practical. They're not in the position where they have to go out and reach out to people on Twitter and the community to kind of like find the next big alpha. The people who are like the CEOs who are managing these large exchanges today, a lot of times they listen to the numbers more than anyone else. They see what works. They see if this is going to be business for them. Yes, some exchanges will go above and beyond and look for alpha, but that alpha needs to make sense, right? If someone has been pushing internally for BRC20 and then made it happen, exchanges now have to look at the data and be like, this is BRC20 overall as an investment. Was that more profitable than integrating, like, let's say, for example, like Ethereum L2 or restaking and all that stuff that's happening in the space, right? Right. These are all very practical stuff, which is, I think the benchmark I look at is the comparison is like these BRC20 tokens that has been launched in the market. Are they better? I mean, most of them are meme coins, right? I mean, most of them are like, there's not a lot of utility around it. So like these Bitcoin meme coins, right? These rats and already Bitcoin meme coins, are they more profitable than the Ethereum meme coins, or they're more profitable than Solana meme coins, right? And if not, maybe it makes more sense to be supporting Solana meme coins than Bitcoin, at least in the meantime, right? So I tell Casey, I'm like, look, my role here is to make sure that, well, I'm going to tell this to everyone, right, including Benny as well, which is I understand that as developers, you guys have very strong opinions on what works, what doesn't work. That's all great. But it's also important to understand that we're all kind of like in this together because the space is so early. And so whereas developers usually think of what product works and what doesn't work, and there's a lot of these debates around it, VCs are the roles, are usually the people, the individuals, the kind of like the party that really brings in the balance where we turn something that is that has a lot of potential into something that we know for a fact will have that 100x or 1000x return for a lot of the investors, including the retailers who are involved in this, right? And the way we do it is by talking to exchanges, building that relationship with exchanges, educating exchanges, hosting our conference, Sora Summit. If you have the chance to come, you should definitely come. We work very closely with exchanges. We invite exchanges to come over. It's by far one, in my opinion, the most curated experience for any entrepreneur in the Ordinal space. If you talk to any of the audience, if you spoke to any of the entrepreneurs who came for Sora Summit in last year, we try to do our best. Like we try to do our best to kind of put a lot of these projects, whether they are portfolio company or not, in the hands of like really good VCs and really good exchanges, and a lot of them end up working together. And so it's like that is the type of environment where I realize it's like you don't have to invest, you don't have to invite the best speakers to a conference. You just need to invite a couple of really, really good speakers, and then a bunch of decent entrepreneurs who are willing to kind of make that travel into Asia because they see that Asian market is important. And then from there, like these are the ones who get the most alpha, right? So it's like our role here is to be connecting, whether it's BRC20, whether it's TAP, whether it's Rune, whether it's Rain, whether it's CBRC20. I know they were on a show a couple weeks ago. Is that whatever L1s are building on Bitcoin, I think it's important that we give equal opportunities for these L1s to showcase what they're building, to showcase what they're doing, so that exchanges, when they look at it, they'll have more information to compare, right? They have more information to evaluate. But most importantly, they'll have a better understanding of the kind of expectations when they're integrating with these things. That's what we do, right? Well, that's what we do is like we find that balance point where it's like, yes, we're very bullish on all the things that Casey are doing. Like, we're both very bullish on a lot of things that Benny is doing. But at the end of the day, we always try to find that balance point where, exchanges, we have to engage with exchange. The developers are developers. Like developers are not built to have like, all the skill sets like a BD guy does, right? Yeah. And so like you put a developer in a room and you have them talk to exchanges, a lot of times it doesn't go well.
Yeah.
Right. So, yeah. So it's like you're better off really like just being very honest with with some of our portfolio companies. Like just let us do the job, right? Let us help you with this, right? And trust us, and we'll get it done. And that's really what we're doing for a lot of our portfolio companies.
Yeah, that makes sense. So basically the advice to like any meta protocol creator, fungible token creator, is to just get a ton of traction, like legitimate traction, not manipulated traction, like 100 million loan from a bank, and then you start doing wash trading. And
yeah, it won't be manipulated for sure. I mean, look, guys, it's because it's been around for like 10 plus years. It's there's no way like L2 is a thing and like within the like last 2 months, right? Like from a product innovation perspective, right? It takes years to build these things, and anyone who understands like building on Bitcoin is one of the toughest things, right? Yes. Bitcoin is definitely not Ethereum, and so by just leveraging a lot of stuff from Ethereum into Bitcoin from product perspective, it's already a mistake. It's basically mean that you basically have to rebuild everything when you actually try to migrate into Bitcoin. But then you will also realize that a lot of the stacks don't even work with what you're building.
Correct.
So you're basically stuck in your bubble again. Anyways, without going into too much details, I think the whole point that is like, the way I kind of explain to people is that, Bitcoin Bitcoin is currently like an embryo with no legs and no arms, and VC's kind of like whipping it and hoping it can fly, right? So it's like, it's never going to end well if that's the case. But I think, like, again, like every VC's had different mandates, like they have different interests involved. Some will obviously do well on paper, but again, like this is where I think it's important, you know, as a VC who's been in this space for well over 8 years, like we have been in the space long enough that we are seeing a lot of noises. We're seeing a lot of stuff happening, but we can also kind of like hold and just be like, okay, we'll just not do anything, right? Until we see something that's actually interesting. I mean, that's a part of the space. It's like a lot of people FOMO in, and that's how things are they get wrecked. Like for us, we've been in the space long enough that we don't feel like having FOMO.
Yeah,
there's always 100x. I mean, if you look at L1s right now, there's 100x on a weekly basis. I mean, these alpha groups I'm in are like, you know, I mean, they make 100x on a weekly basis. These guys are like super degens, right? So is that happening on L2? I don't think so, right? I mean, most of the L2s, I think, the valuation would be so high when they list. It's going to be so high. Anyone who buys into it will probably get wrecked. That risk is like a lot higher versus like in the L1s where it's fair market mint or like majority is fair market. So that it's like you're a lot safer. Like everyone is coming in at the same price point, so there's a lot less opportunity for you to get wrecked.
All right, Jason. You know, I really appreciate your candid kind of responses to all this, because we've had a lot of these questions kind of brewing in the back of our mind. It's like, you know, how does this really work? You know, do the VCs actually see the smoke and mirror tactics that we see? And you know, how do you adjust accordingly as far as like allocating funds to a lot of the noise that happens versus the signals, like something like track or something like that. So I really appreciate your time. I think you're thinking about this like how we think about it, and it's really fundamental. Like we look for like actual solutions, and we like talking about things because the only stuff that we talk about are stuff that is very interesting to us. Like it is not like any like biased sort of way. We're just like interested in the space and we like talking about it. So I really appreciate your time, Jason. We definitely hope to have you back on just to kind of talk about updates, specifically go deeper into like track and karma and like all the stuff that you're doing as well. So thank you so much, Jason, for everything, man.
Thanks for having me.
Yeah, man. All right. Thank you guys for watching. Appreciate you guys. And we will catch you in the next podcast.